Everyone, welcome back to 5-Day Crypto. Happy Monday. Today we're going to look at Telcoin. Why Telcoin? I haven't covered it before. Well, I just got a request in my Patreon group, so that's why we're doing it. Not being paid, no shills, I don't own any. It's just for your benefit and your benefit alone. So let's get right to it. The 5-Day Gaussian channel for Telcoin. This is a good indicator to start with. If you don't have the 5-Day Gaussian channel, I would suggest you get it. You can use it on different time frames, but the 5-day tends to be the most accurate, the least amount of fake outs, so that's why I use it. If you want to go up to the weekly, that's better than going down. The lower time frames have more fake outs, and I would just say the 5-day is more consistent than any other time frame. So that's the reasoning. That's the most questions I get on why the 5-day Gaussian channel. There you go. So where we got? Well, let's zoom in here. These lines, this top, median, and bottom will act as support and resistance depending on which way you interact with it. And the longer you spend in the Gaussian channel, the longer it tends to hold you there. If you break, this is my opinion, that if you break one of these moving averages, or these lines, whichever way you go, two candles confirming one or the other will likely increase your odds greatly that you're going to test the next line. So we closed one back in November 22nd. We closed our next one November 27th, 5 days later. Each candle is 5 days, which increase our odds of going down at some point of testing the bottom line. It doesn't mean that has to happen, but historically on a lot of coins, that often tends to be the case. However, you can come back up and test this first. So that would be a pretty nice rally from here, actually, right? That could potentially be another 40-45% back to the upside before going back down here. And also, this doesn't have to happen immediately, right? As you've noticed, we look like we were going to come down, and then we're just kind of floating in here. So just because we're going to come down here doesn't mean we can't go up first, and it also doesn't mean that we have to come down to the bottom, okay? So just because you're doing that and the odds increase for that doesn't mean that this wasn't the actual lowest that we'll see again, and it doesn't mean that we can't go up through here, right? That is a possibility. It's just your odds increase, because that's all you have in crypto are playing the odds. Nobody knows exactly what's going to happen. You have charts, you have indicators that help you decide what has the greater possibility to happen. So the odds of Telcoin staying in here a little bit longer is great, right? Because we're in the bottom section of this 5-day Gaussian channel. So what you want to watch for is a breakout of this to the upside. So going back to, late 2020 here, we had actually a red channel. You might wonder, how does that happen? I'm glad you asked. When the top of this, or basically the entire channel, if it starts going down just a little bit, it'll turn red. So as soon as it crests here, and you see just a barely turning down, right? Going straight across, you're okay. If you turn downwards, even a minute detail, you turn red. And then when you turn red, that doesn't mean catastrophic things are coming. It's just more likely that your prices are going to be down here for longer than the next couple days or couple weeks. It's probably going to be a while. Now, ideally, what you want to watch for is a break out of the Gaussian channel, and you want to have two things you look for. If your channel's ever red, it doesn't have to turn red, right? We could come out of this and stay green. That would be ideal. If you do turn red, remember, likely prolonged consolidation, which we got before. And then what you want to watch for is price action above the channel. That's step one. And then step two, you have to wait for it to turn green again to get the best confirmation and have the most certainty that prices will continue up, okay? So yeah, you would have missed this part of this rally. But if you want to be making money consistently, you're not going to get always the best ROI. But I never get the best ROI. There's a lot of people that outperform me on ROI. However, I rarely lose money, and it's because I wait for really tight confirmations that often don't go the other way. Okay, so you could also use a multitude of other things like stop losses, but that's a whole different story. So price action on top, channel green, and two candles. So there's kind of like 3 steps, right? So there's one candle, there's two candle, price actions above, that's 2 check marks, but then you got to wait for the channel to turn green. And then look what happens. Often great times ahead. So you can look at it on anything. You can look at this on Bitcoin, Ethereum, go back in history, study it, and look for the patterns. You'll see that with that, those exact steps, price action above, turn channels green, 2 candles closing above it, more than 9 times out of 10. It's working very well. It's more like 99 times out of 100. Okay, maths. Okay, so let's see what else we got. So same chart. I wanted to show you the difference here. Same chart, same 5-day Gaussian channel. Why does it look different? I'm glad you asked. One is log scale, the first one. This was linear scale. So what's the difference? I'm glad you asked. Look at the size of this candle. See how long it is? 112% move. See that? I'm getting that right up here if you're trying to follow along. This is 112% to the positive upside, right? Look how long that candle is. What do you think this candle is over here? This little one right here where my cursor is. I'm not going to show you yet. Guess what? This candle right here, this little short candle, is 118%. So log scale accounts for all that, and you can get more data in the same chart. That's why log scale works out very well, and a lot of traders will use that with more experience they have, because the same move, this 118% move, will be the same size as another 118% move, no matter where it is on the chart. So now we'll look at that move. There's 112%, 118%, almost the same now, aren't they? Right? Do you see that? That is the clearest, easiest way I can explain log scale versus linear scale. So if you're new, maybe you learned something today. So see that? Log scale, right? I would recommend using log scale because you can get so much more data on the chart versus linear scale. And you can see back in here, you can't even see it. It's like little dots, right? So hopefully that helped somebody somewhere. All right, now what do we got? Well, this is a clean, simple chart. We don't have a lot on it because you want to do this time to time. So the more experienced traders will have less indicators. Usually, there's a time and place to have your charts loaded, but, support and resistance can often be all you need. And this is what we're looking at. So what is this line? This is the 21-day exponential moving average. It's just one of my favorite indicators, or my favorite moving averages. There's a lot of traders that have different ones. Not one is right or better than the other necessarily. This is just my favorite, and it kind of discerns for me on the weekly chart. We can go look at that real quick. The weekly chart, it's the 21 week. So usually when you're above it, price can remain bullish, as you see here. When you break below it, more consolidation, tends to be more bearish, sideways, crab, all that stuff. So that's where we are on the weekly chart. We need to get back above it. But zooming into the daily, let's look for some support and resistance and what we got to do. Well, first of all, you want to flip that on the daily chart. So 0.013 is where we're at now. We're not that far away from it, right? We just got to do that. That's step one. Get back above that. Another 6-7% rally. We should be there. Okay, so zooming out more, what do you see here? Well, it looks to me like support, a big support line is going to be right there, right? Previous resistance, resistance, resistance. We finally broke through it. We came back. Look at that wick back in whenever this was, May. Look at the May drop here, right to that line. Came back up and then fell right back to it again. That's 2 significant touch points on a daily chart saying similar things right around that penny, right around that penny level, right? 0.01. Okay, so, and then what? We rallied back up again, and we hit it again just a couple weeks ago, right? Wake up. This is going to be a significant level. If you break this, that would spell prolonged trouble, in my opinion. This would likely be the floor, also, in my opinion. This is a strong level, so right around that penny level. Obviously, it's just a little bit below it, but I like that for the daily close, especially after you break out of your local top here, and then you have several points. That's big support right there. And going out to the weekly scale, you can still see that is pretty significant area for support. Again, look at that weekly scale now. Resistance, resistance, breakthrough, come back, support, support, support again. Big, very bigly. Okay, now how about we go even very more bigly? We go to the monthly scale, right? The monthly scale, the same line. You can drag this one over now. Now look at this. This has become more bigly. Where's Trump when you need him? Very bigly. So open touch points. The more touch points on a support and resistance line, simply the stronger it is. Now this is your 21 month, which usually will hold when your prices are going to remain bullish, and we're almost at that same level. So I would look for monthly candles. We closed this month in 11 days and 8 hours. It's highly probable, in my opinion, that we hold that line. What is that exact number? Well, there you go, in the yellow there, 0.011. I would highly suspect we hold that. We've wicked down here under it, right? Wicks just tell you where the price goes. The closing candles is what really matters. So that is what I'm looking for out of Telcoin. Now, hopefully this is a little bit eye-opening for you if you have Telcoin. So be sure to like the video if you haven't already. Follow us on Twitter. Post a lot of things on there. Try to get more active in there. We have over 4,000. Right? We've almost doubled our following in Twitter over the last month or so. We have a free Telegram group. We're growing pretty rapidly in there as well. If I'm not making videos on there, you can, usually find some tips and tricks in there, some small snippet videos. If you want more help than that, see how I'm navigating the markets. I've been in crypto for about 5 years now. If you need more help, I want personal coin requests like this very one. If you want to know ins and outs, tips and tricks, more than that, that's what Patreon is for. And it is also a private Telegram. You get access to that as well. And, I'm active in there. I post many different things in there that I don't post anywhere else, certainly not on YouTube or even Twitter. So there are 3 different places you can join. That's all I have. I have no affiliate links ever. I'm never going to be paid for my words ever. That I can promise you. And hopefully that helps somebody somewhere today with Telcoin. So crab market for a little bit. We'll get out of it. Don't lose sight. Up is coming. Okay, my opinion. Up is coming. Let's go look at where I know it's 12 minutes in already. I meant to do the crypto fear and greed index. We're still in extreme fear. Okay, so we can stay down here for a while, as we saw in May and June. So don't worry about it. Look at where we're making. No, we're making higher lows. Let's put on a little shorter time scale. So look at this, like little coiling up here. Look at that, kind of a top line resistance around that 29 level. At the same time, we're making higher lows. That's nice to see. You'd not want to see lower lows, but so far we're making a nice pattern. I would like to see a move, a break, a considerable break to the upside in the not so distant future. Quote of the day: forgiveness is the final form of love. How sweet. Card of the day. Anybody got this one? This is a tough one because it's not a completely stock Aston Martin. It's Aston Martin, the new DB11, but it's also tuned by Mansory, as you can see here. Look at all this forged carbon. If you're wondering what that is, maybe you've never seen forged carbon before. Usually, it's only found on Lamborghinis, but Mansory said we'll take it from here. Forged carbon is kind of the new age movement. High-end Lamborghinis have that, Aventadors. But Mansory decided to put this on the Aston Martin DB11. And look at this. The DB11s have two-toned roofs like this. You see? This is like platinum ice, white, on this kind of like iridescent metallic chrome green, whatever the hell they did. Interesting, to say the least. Let's see at another angle. Pretty amazing looking car here. White dashboard too. That could lead to some glare. We look at all this forged carbon. You can kind of see it better here. This is impressive stuff in real person. I've seen this a couple times, but they even made the grille in this forged carbon, which I've never seen anywhere before. There's inserts on the hood, forged carbon. The mirrors, forged carbon. This is impressive. The vents here, pretty nice. I haven't seen one like this before. And then another, same car. Pretty amazing. This is Mansory's kind of company's version. What do you think? I like it. For the 3 of you that are still here. All right, we'll see what else we can do. I know it's a slow day in all crypto. It's going to be there until we make a decisive move to the upside. We need Bitcoin to get back above its 21 week. Maybe we'll do Bitcoin next, just to give you some. I don't know. We'll see. Maybe I won't do anything. Slow day. There's not going to be 12 people watch this video. Certainly the one. There's nobody watching now. I'm talking to myself. We can stay here all day now. Nobody here. All right. If you're still here, Rockstar, 57 gold stars to you. You deserve it.